Let's take a live look at the open of today's trading. The Dow is starting the day relatively strong in the green, under just 0.75%. Joining us this morning in the broadcast center is business journalist Ann Berry. Always good to have you, Ann. Welcome.
Thanks for having me back.
So let's talk about SpaceX and the rocket that the company says crashed into the moon, which is remarkable.
That's not a metaphor.
No, that is really what it did. It actually slammed into the moon, and yet it happened after the first earnings report since its IPO launch. What was your take on the results?
Well, the reaction to it was kind of the metaphor, right? Kind of the stock crashed into the moon. So we took a look at those results. Revenue, a rocket ship, up 92% versus the same time last year. But 92%. But here's the rub. $18 billion of excess capital expenditure, more cash being spent to build out, yes, you guessed it, AI, and also some of this rocket infrastructure. And investors just said, isn't sitting with us, don't like it at this kind of valuation. We don't want to see you blowing through cash like this.
So amazing. You could have 92% growth in revenue, but if you're spending too much cash or people don't think that you're running your business correctly, it could, affect you so negatively. Let's talk about China. They are coming up with a response to U.S. trade sanctions. What do you know?
So the U.S. trade sanctions have a couple of different elements to it. Remember, we had those Liberation Day tariffs. They were deemed illegal by the Supreme Court. Replacement tariffs were put in place in July. And just days later, China said that 12.5% you just put on us, we're not having it. Plus, the U.S. had placed sanctions owing to potential human rights violations. So China has turned around and said there's certain things the U.S. now can't do. They've placed their own sanctions on half a dozen U.S. companies, including in biotech. They've turned around and said we'll place export caps on things like drones to the United States. So the two nations, the U.S. and China, at right now targeting things of national security interest, targeting things like humanoid robotics, humanoid drones, and essential technologies. And there's real tit for tat going on right now.
Finally, let me ask you about this OpenAI story that they're admitting once again that certain AI models went beyond their intended testing boundaries. Yes, and we've seen that from Anthropic as well. Are those concerns, are those incidents starting to have any kind of pressure, downward pressure on some of these stocks? Oh,
absolutely. And some of these models were apparently roaming for days before they were actually detected by OpenAI. Now, it's very interesting. For some of the AI stocks, it does cause issues because people are saying, is this technology under control? Do we know where it's going? For other kinds of stocks, though, this is a boon. Think about cybersecurity stocks. The technology that is designed to defend against these kinds of attacks are exactly the kinds of AI-related stocks that the market's saying they are going to benefit no matter what. They're going to benefit if times are good to stay ahead of the technology, and they're going to benefit in times of fear because people are going to double down on their spend.
We'll see what all happens. I mean, every time you see one of those stories, it says it broke out of its, confinement and attacked another AI model that it wasn't supposed to. You're like, okay. Once they put it in humanoid form.
This recent revelation was done by the British government. They were running tests on these models, and one of the bots pretended to adopted an identity to try to get code approved by a real human.
That's not new, by the way. That's happened in tests before.
Gosh.
Scary. Yes, and we're worried about a launch. Okay, I'm not even going to go down and get on my soapbox. Ann Berry, always great to have you. Thank you very much.